Raoul Pal is one of the top thought leaders in the crypto space right now, so it's always good to keep an eye on his latest insights. And he recently shared some analysis on the crypto market, and the data suggests that the prices are not just going to increase, but explode higher in the coming years. It's no secret that crypto has taken a bit of a hit so far this year. At the time of this recording, the market is still down around 20%. However, this new data from Raoul suggests that the next 1 to 2 years is going to be spectacular for crypto. And so in this video, we'll be looking at the current situation, what is going on with the crypto market right now, and where are the prices going next. Then we'll take a look at what the demand for crypto looks like over the next few years, as this is one of the keys to higher prices. And then we'll finish up with the data that shows that crypto prices are set to soar. As always, if you do enjoy anything in the video, then drop a like, and a big thank you to everyone who does. Okay, first up, frustratingly, Bitcoin has been trading in this 40 to 60k range for over a year now. And this is very uncrypto-like, so what is going on and where are the prices going next? Ready? Let's do this.
So in answer to right now, I don't know. The chart looks like it wants to go lower again and have another spike low, and that's been my view for a while. However, the crypto markets have not made a new low versus last year. And I think we've thrown 8% inflation, the market pricing in at 1.8 rate hikes, and a war, and you haven't made a new low. It's like, okay, that's telling us something. Now, maybe that can change, but I mark that down as interesting. I've got a lot of technical divergences. A lot of the on-chain activity is very interesting. So I'm still thinking that we probably captured the downside in this 50% down bracket that we've been in with Bitcoin and ETH. So that's where I think we are.
So he makes a good point, which I actually covered myself last week, and that has to do with the bigger overall trend. So obviously markets don't just go up in a straight line. Even in an uptrend, it's going up and then down and then up and then down, and then the opposite in a downtrend. So in an uptrend, it's setting higher highs, then higher lows, then higher lows, and so on, and then opposite going down. So just to quickly show you what that looks like, in an uptrend, you have these higher highs, then you set your lows, higher highs, then you set the higher lows. We had the peak in the market, which was here. And then although we had this big crash, which set the low at about 29,000, we did in fact go on to set a higher high and a higher low, as it only came down to 33,000. So this is a really important support line at about 30,000. And even with 8% inflation, rate hikes about to hit, COVID still going on, and even a war breaking out in Europe, crypto has held the line that was set back in June last year. So a key level of support is this $30,000 mark for Bitcoin. Okay, next up, we're looking forward. And a very important question when it comes to prices is, what is the demand going to be for crypto in the next couple of years? Well, if only there was a way to know that. Well, great news, there is. Check this out.
So I've talked about this before and just updated it for Global Macro Investor, my research service, which is crypto users versus the internet. What we did here, well, Remy did it for me, was we started at 5 million users each. When they both hit 5 million, we then start measuring them. And what we found is that crypto has been significantly outperforming the internet in terms of adoption. We're way ahead of internet adoption. So if we just continue at a kind of slightly slower pace, we get to 5 billion users by the end of the decade. So that's basically total adoption of crypto. Metcalfe's law is the network effects. But there's the other thing called Reed's law, and Reed's law is when you build network effects upon network effects and you get true exponentiality. So if we're thinking here, we're building the foundation layer was the internet, then mobile data, 3G and all of that starts accelerating it, and broadband and all of those things, and then you add the internet of value on top. Of course it's more exponential by its very nature, and the fact that you can own part of the network makes it more attractive for everybody to be involved. Here's a couple of assumptions. So what you can see is in the first 6 years, the internet grew at 76% a year, or 78%. Crypto's been growing at 117%. So it's much faster growth. So we're at 300 million users now. At the same point, the internet was only at 119 million. So you can see the scale of how this happens. So if we assume that suddenly everything slows down in crypto adoption and we grow at the same speed the internet did over the next 4 years, so this is now from year 6 to year 10, we get to 500 million users. So 1.2 billion users. If we just assume the ratio lower, then we still get to, ridiculous numbers of 2 billion by 2026. So it's incredible. And when you're growing at 100% a year, it's 4 billion the year after.
So quite simply, that chart is bananas. It shows crypto is growing close to twice as fast as the internet did, 137 versus 78%. And even if it comes down to say 40% annual growth, that still means we're going to go from about 300,000 users today to over 1 billion users in just 4 years. So basically, if things continue as they are, then we have to see explosive price movements again in crypto. Okay, so let's finish up with prices. Next, Raoul builds off his work of how to value a network, and it gives us a glimpse as to what crypto prices might look like in a couple of years. And spoiler alert, it too is bananas.
And this is the one I'm pretty proud of. So I've been bleating on about Metcalfe's law, network effects, how to value these things. And it's very hard to do because Metcalfe's law is quite a complicated formula and you don't know what data to use. So I thought, I wonder if I can approximate it. And Remy and I went through all of the data for writing Global Macro Investor. And what we built was a network value model. And we tried a number of different things and found out you can explain every crypto network by 2 simple things: the volume traded on a daily basis, monthly basis, and the number of active wallets over that period. Once you map that out, it's one multiplied by the other. The charts exactly fit that of Bitcoin. So we thought, okay, this is interesting. So basically the network is the amount of activity on the network, not in number of transactions, but in value that gets exchanged every day, and the number of people exchanging value. So if you think of a network, if you've got one participant who's doing $1 billion, it's not very valuable. But if you've got $1 billion being done by 20 people, you've now got a network. So it kind of makes sense. So I wanted to then test it against Ethereum. So if we look at the next chart, it works perfectly for Ethereum as well. So that's Ethereum. So really interesting. And it also works for XRP, which is weird. You wouldn't imagine it would, but XRP works exactly the same. So then I tried it for Polkadot, and it works exactly the same. So what it shows you is everything in a network is basically the volume of transactions in dollar terms or value terms, and the number of people using it, and that's it. And that, I think, is a big breakthrough for the space. I don't want to pat myself on the back. Now, doesn't mean I can yet forecast it using this, but I can show what drives the value of a network.
So, building off network effects, which basically says that the value of a network can be determined by the size of the network and its users. And this is the next level, which shows when you take all the active users and you times it by the volume that they're putting through, then you get extremely close to the market cap. And as crypto investors, we are simply buying a part of that network. We're buying a part of that market cap. So, as long as you have a growing number of people using the network, then prices have to go up. And what did we see in the first chart? That the number of users is going to triple. And that is why the crypto prices are set to explode. He didn't say it, but that is what the data is saying. Raoul Pal is an excellent thought leader in the crypto space, and he helped me cement the idea of how to value a network or a crypto asset, and it has to do with network effects and not by cash flow, which is what's primarily used for the stock market. And he's now taking it a step further, showing that the market cap of a crypto asset is largely to do with two things: the number of active users by the volume being put through by the network. So if more people are coming in and using the network, then all things being equal, the prices will increase. And what happens to prices when the users are set to triple over the next few years? So there you are, guys. Hope you enjoyed. It looks to me that crypto is a great place to be for the patient investor who can ride out the short-term volatility. Yes, we have to get through the uncertainty of the next few weeks and months, but the future definitely looks bright for crypto. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. If you haven't yet subscribed, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.